Hello, good day, guys. Nick here, SuperForex analyst. Today I'll be looking at the currency pair metals, gold, and gold price forecast as gold recapture key 21 DMA barrier on soft US CPI inflation. We can see that gold price is challenging the key $1,088 level on a two-day positive momentum, while US dollar tracks the US Treasury bond yields lower on a cautious Federal Reserve upbeat mode. Gold price is at a critical juncture, awaiting the US inflation data for a fresh directional move. Gold price is flirting with a new two-week high near $1,880, rising for the second straight day on Thursday. Gold price has regained its recovery momentum as the United States dollar has stayed on the defensive alongside the US Treasury bond yields amidst a cautious US Federal Reserve stance on interest rates. All eyes on the critical US CPI inflation data, while minutes of the Fed September monetary policy meeting has showed that on Wednesday, that board members agreed that the interest rates should remain restrictive for some time, while adding that we have a moment of risk of over-tightening now being balanced. Now, I agree that the community was in full position to proceed carefully in what appears to be a cautious shift in the Fed's tightening approach. And the recent dovish Fed talks also justified reduced chances of any Fed rate hike this year, fueling a fresh decline in the US Treasury bond yields across the curve. And the US dollar briefly jumped in an initial reaction to the FOMC minutes release, but gave into the dovish Fed expectations and falling Treasury bond yields, sending the non-interest bearing gold price to fresh 2 weeks high at $1,877 per ounce. And also, Fed Governor Christopher Waller has joined the chorus of his colleagues, stating that higher interest rates may help the Fed slow inflation, allowing the central bank to watch and see if its own policy rate needs to rise again or not. Markets are currently pricing odds of a mere 8.5% for a November federal rate hike, down from about 13%, which has been seen a day ago. Meanwhile, the probability of an interest rate hike on December is being seen at 26%, and this could add to the bearish momentum as foreseen in the US dollar risk sentiment, which has remained in a sweeter spot in the face of China's stimulus hopes, while a correction in oil prices and dovish Fed's bet. Earlier today, the gold price is building on the previous upswing as the dollar keeps its downside intact amid expectation of a soft United States CPI report, which could cement an extended Fed rate hike pause for this year. So in such a case, gold price could catch a fresh bid wave, test the $1,900 mark. If the US CPI data surprises with a hotter than expected print, it could offer temporary support to the US dollar while triggering a pullback in the gold price. Now, the annual US CPI is seen rising 3.6% in September, slowing from a 3.7% increase in August, while the core CPI inflation is set to drop from 4.3% to 4.1% in the reported month. More importantly, the economic calendar points to a MOM increase of 0.3%, which would represent an annualized increase of roughly 4%, which is too hot. It will also be a repeat of last month's outcome, being said by FX Street senior analyst on a well-explained note. Now, we have to see that on the technical level, the gold price daily chart shows that the bright metal is a critical juncture and challenging the key short-term descending on the 21 daily moving average, DMA, at 1,879, while the 14-day relative strength index indicator is just sitting beneath the midline, raising doubts about the additional upside in gold. Now, on a daily time frame, we have closing the 21 DMA barrier at 1,879 is needed to confirm a bullish reversal from multi-month throws, with next bullish target marked at the $1,900 threshold. At that level, the mildly bearish 50 DMA aligns. Now, further up, a fresh advance towards $1,926 resistance cannot be ruled out. That level is the confluence of the 100 and 200 DMAs. While on the downside, gold price could meet initial demand near the 1,860 region, below which Tuesday's lows of 1,853 could be put to test, while deeper declines should challenge the 1,840 round figure. While we all this said and done, we are expecting much more closer impetus to at least to touch the resistance at 1,892.66, and then before we'll probably free fall. That's our technical analysis on today's metal gold. Now let's move over to the stock markets. Hi, welcome back, guys. And on today's indices, we'll be having a look at DAX. And European DAX are closer higher on the day, while German DAX rises over 1%. Now, the major European indices are closing higher on the day and also at the highs for the day, with German DAX trading up at 155.94 points or 0.03% at 15226.17. And we have for the trading week, the major indices are lower on the week, while German 30, 1.02%, and looking up and going. And this is as a result of the most recent fundamentals behind this, which is that the Dutch bank strategists recommended equity overweight into 2024. Since the release of this news event, we have been seeing an upside. Strategists at the Dutch bank have recommended an overweight in equities into 2024, as risk are not well reflected in the market, and those are about to turn into opportunities. We anticipate a weaker growth, disappointing beats in earnings, and disappointing central bank communication into Q3, while Dutch bank strategies led by Maximilian Ulier, head of European equity and cross-asset strategies, said this in a note. So we are expecting a push up and a breakout of this resistance and heading to a new point at 15789.19, which from this end is about 19853 pips from that entry point. Of course, which is good money. And that's our technical analysis on today's indices, German 30, DAX. I remain your host, Nick. Bye for now.